Hi everyone. So I'm gonna discuss this easy question. Is the current market rally
Recording in progress.
is the market rally sustainable? It's May 28th, it's the end of the month, and we're gonna discuss why we believe that the market rally is sustainable and the chance to buy the market at the lowest in 2021 happened actually in the month of May. So for the people who bought a lot during May and didn't sell, you made a lot of a good decision for your short-term and your long-term portfolios. So I made a poll discussion. Leaders would often go all-time highs even when the average index does not. Also, very strong V-shaped recoveries will rarely retest or make new lows even when the entire market gives a dip next month. In my view, and I'll show to you my charts, we have bottomed. From what I'm seeing in several charts, and I made this poll just to see how the average market participant is seeing the market. Typically, stats will also tell you that when the market truly bottomed, not everyone is actually bullish. There's actually skepticism. So you're seeing actually that the majority of the people, 54%, actually believe that it's just a trading range. So when you're saying that it's a trading range, they believe that it's going to be choppy, wherein you buy low and you sell high. Whatever you bought in May, you're going to get a new low next month or next month. Was May 14 the actual bottom? Only 35% actually believe that that was the bottom and we will actually go a V-shaped recovery. So the majority of the people, 54 plus 11, 65% of the people actually are in the mentality of selling on any rallies, not really buying. Similarly, when I check people, 13 out of the, 46 plus 13, 59 or 61, only 20+% actually believe in a bullish format. 80% actually believe that it's just a range or we will be bearish. That is actually an indicator that we are actually supposed to be contrarian. A lot of technicals actually say, whenever you read books, it's always normal that with extreme fear comes the actual rally. So fierce rallies happen when people are skeptical or have maximum pessimism. So let's take a look at what happened this week. This week, amongst the people actually were thinking that GameStop could not go any higher. GameStop actually defied gravity. You're seeing that around May 17, we made the buy call here at $160. It's now nearing $250. Who knows, it goes $320 or almost a triple top. Same thing has happened here, here, and here. So basically, GameStop has been a gift that keeps on giving. I'm just not sure if it will actually break 325, but just be lower highs. Nonetheless, even if it just rallies to $300 or even just stop there at 254, that was still a great rally, still. EMC made a break of new highs from $20, even hitting 26. You'll see that this was around, let's say, May 17 also. That was about $12. That was actually more than 100% already in just a span of a week. You're seeing that not only GME and AMC were getting the rally. You know that BBBY, Bed Bath & Beyond, participated in this meme stock rally during January. This was Bed Bath & Beyond hitting 18 to 52. And we do see a repeat happening. And so far, our assumptions have been happening too. Take note that $24 here is 27. I guess we'll retest $30 or $32 in the next coming weeks. Take a look at Virgin Galactic. Very strong volume. People are saying this was a short squeeze. Agree that it could have been a short squeeze. Nonetheless, 17 to 35, let's say it goes 35 tonight, or even if it doesn't go 35, even at current levels 31, this is approximately more than 100%, which should actually scare all the bears out there, even if this was an actual squeeze. Take note what happened. Selecta Biosciences has a huge short float. In Awesome10X Inner Circle, we discussed a lot about short floats. We discussed that the short squeezes in play when the short interest ratio is actually more than 20%. And most of these names actually qualify for that criteria. Selecta Biosciences went up from $3 to $4.50, almost 50% because of insider buying by the company. Take note, GoodRx also from about $28 to $38, a 30% increase because of insider buying after a 60% drop. So we are seeing actually some people actually start accumulating a lot of companies at discounts, even the main buyers as the insiders of the company. Beyond Meat, strong volumes on the upside. If you were short, you will squeeze a lot. This was $108 all the way to $145. The move got a upgrade here from about 110 to 116 and all the way squeezed to about 145. No news actually, but I'd say that the news here is simply a squeeze play. Nonetheless, short people are going to be so scared because squeezes like this are just a start of a real actual reversal of the stock. For Beyond Meat, there's also a lot of upgrades because of the restaurant recovery. You've got all the partners, Starbucks, Dunkin' Donuts, Tim Hortons. You've got even McDonald's Plant Meat. So with all of these companies, major brands, young brands, for instance, KFC, Chicken Vegan Nuggets, all of them as partners of Beyond Meat, including Alibaba, including Pepsi, if you recall. There's definitely a reason for Beyond Meat to get the bulls on their side and the shorts to actually cover. And those who are stubborn enough not to cover will get the revenge move, actually potentially even as high as $170 in the next coming months. I'd argue that this month of May lows was actually the bottom for Beyond Meat. You won't see any lower than 110 below anymore in the next few months. Roblox, how good is this move? This month of May, that was the exact low. After earnings of Roblox, it just kept on rallying. This is almost 50% higher from a low of $64 all the way to 97. Any dips of Roblox in the next coming weeks is going to be supported perhaps at a higher low already here at 86 or even at 88. So you're seeing that this is continued strength and winners will continue to win. All-time highs for Roblox. Fintech Tiger. This is Tiger Holdings. After a good earnings, we have seen already Roblox good earnings go 50%. Who am I not to say that $17 or $18 was just the beginning of the bottom. And with high significant volumes buying fintech, I'd say that Tiger is on its way for a 50% jump all the way to 27 or 28, even in the short term. And this has been the drop already. The March was the drop, March, April, May, and that is the bottom. There's no way for you to get Tiger anytime in the next 6 months below 18. Time's up. You didn't buy it at 18. Go ahead and buy it at 22 or else you're late. Joint Corp. Actually, I've never covered this, but I'm showing to you that there are some companies that are going all-time highs just to show to you that if March to May, if the company actually didn't falter and went actually to the upper lows like this one, higher lows, March to May, chances are it's just going to continue the strength. So basically, leaders like Jointco are just expected to go up. Good earnings, chiropractor company goes up, all-time highs. Now take note, this has been rising since March lows of $8. Yes, you'd argue, oh my God, it's already almost 10x at $70, but the trend continues to be their friend, which means that the bears are getting killed. Take a look at more companies. This is Skyline Champion Corporation. I don't actually cover these companies, but just giving you that breakouts that have been sustained in 2021 didn't actually reverse. They actually went all-time highs. So it's just a matter of just Cathie Wood growth stocks actually having a drop, but more or less the entire market is strong. And I'll argue actually in the next few charts that even the growth stocks have already bottomed out. Even the ARK-K fund, ARK-G fund, all the Cathie Wood stocks have also bottomed out, which means that we're actually in a bullish phase in the next 6 months of the year. Take a look at Fubo TV. After the strength of earnings from about 16, it's already up 50% here at 26. And other people might argue, well, that was the resistance before. Could this be a resistance again? My argument is not. Any drops here at about 24 or even at 22 will be bought. You got to get your pen and paper, guys. I'm giving you guys money to be made. If you want to make about 50%, any dips of Fubo TV, here at about 24 is a godsend entry. 21 was a great entry for those who entered. And for those who still don't have an entry, the reason why Fubo TV is generating a lot of movements, you're noticing the squeeze here, high volume. Pay attention, guys. If you want to make 50%, find a company dropping 80%, high interest in the short interest ratio for a squeeze move, and good numbers. Fubo TV had it all. High volume on the squeeze here, good earnings, flag, straight out, reopening playoffs. So you've got all the catalysts for Fubo TV to actually go up. So I'm not sure if it will actually go up straight without any pullback, but any dips in my view is gonna just trade in a moving average way. You can just take a straight line or a ruler there, and any channel down here, but 24, 22 is a buying opportunity. Score Media Gaming, also the same way. We argue that DraftKings and Penn are going to go up. So far, we are right. But other companies like this Canadian company, which also has its presence in USA, is likely to go up. It's true that DraftKings is our number one pick in the sports segment, but it also is true that the sector is so strong that even the number 3 pick should actually also benefit. So 14 has already rallied the 17. Any rallies here will not be stopped. It could rally all the way to 24, all the way up with any pullbacks, shallow dips. It's going to be a BTFD. Buy the fucking dip. They know what happened with additive manufacturing. After a 70% drop, you're seeing this was March, April, May, lower lows, but actually the momentum to the downside has been so little. Why is that? Absence of sellers. When you have an absence of sellers, good earnings here, take note, almost the same pattern as Roblox, almost the same pattern as Fubo TV. Strong volume on earnings. That was the capitulation bottom here at 16. So far, it is already up almost double. $16 to $30, 16 to 32, that's almost 100% from the lows. The trigger of 3D systems means that other additive manufacturing is going to benefit from the sector strength, meaning your nano dimension will also go up, your X1 will go up, Stratasys will go up, desktop metal will go up. Now let's take a look at retail. Jill was actually a retailer, a consumer cyclical company that has been rumored to be going bankrupt in 2020. Of course, we know that they got a lot of leeway to actually recover. Actually, after falling 98%, the reason why I highlighted this is because find companies falling 80%, 90% for the last year or last 2 years, or even just this year, and find a leeway. When you see the volume there, it's likely to be a short interest coverage move. And when you find it correctly, it just keeps going up. Take note, that is a 12x move from the lows, from a retail company. So you can actually make 10x from companies if you manage to get a good bottoming out process. Meaning, we are actually taking a look, not just at stocks hitting all-time high leaders, but stocks that we believe that have fallen 80% that will actually move at least 100% or even a 10x move from there. Take a look what happened to Jill. Jill, ticker symbol, is actually a retailer, a women's retailer brand. Take note, from about $3 all the way to $19, it's just been creeping up, and then just magnitude, duration, magnitude, it will have another duration, perhaps at 15, and then the trend continues higher. So we're trying to find retailers like that, and the fact that these retailers are moving like this shows to you that the reopening story is very hot and momentum. It might not be a 100% mover when you're already that late, but you could see that any pullbacks will have an entry point and it's not a reversal anytime soon. Now let's take a look at some drone companies, OTC names. You've seen this already happen. This is March, April, May. We argue that March and April, right? And this is May, which is a higher low. When you see a company actually don't make a new low, but actually a higher low, we argue that this drone company is on the way up already. While it's not yet moving, here at about 340, you might as well buy it now before it goes up to 480. There's stocks that Alpine Holdings is going to be similar to ABML. They will be opening listing in NASDAQ. So NASDAQ listing and an acquisition, take note that Alpine Holdings owns Value Drones, owns Impossible Aerospace, and another company. Actually, they bought another company here, which actually made it rally all the way from about 250 to 5. Anytime you see a company go 100% on a short-term move, there's actually a lot of short covering there. Lack of sellers means absence of resistances. These stocks can go up fast and quick. So put your Alpine for today if you want to have an entry on an OTC stock. ALPP here at about 340, you should be okay. Now let's take a look at further names. Not all drone companies can rally up, but this is the same recipe. March, April, May, you're already seeing this 100% move. We argue that this May or June, you'll see another 100% move on Plymouth Rock, PLRTF. Same sector, good risk reward. You want to buy when the risk is very low and after a drop from $1.40 to 40 cents. It's already down 70% from its peak. Dragonfly, all I'm waiting here is actually a volume. But for this one, earnings upside. That's why this went up from 130 to 147. That 10% up is just the beginning. You've seen it already happen. So all of this just means that it's just pattern recognition. Roblox, good earnings, 50% up. Tiger, good earnings, about to go 50% up. So what's going to happen with Dragonfly? Almost the same pattern, guys. Good earnings, 50% up. Because it's oversold, the $1.40 there can actually go to $2 or, yeah, $1.80 or $2. You still make 50%. Nobody wants to complain with a 50% rally. Take note what happened. ASDN, somebody actually mentioned this in our inner circle. ASDN, buying at about 250. That was already quadruple bottom. Bottom here, bottom here, bottom here, bottom here. Take note, after a 65% drop, strong rally last night, 20%. You'll always get 20 to 50 to 100% moves. Why? Absence of sellers. Very thin demand, earnings movement. And actually, that's just the recipe. Thin demand, 70% drop or 80% drop discount, very low downside, and you just have good earnings. You make automatic 20 to 50%. Those are actually patterns that you are seeing, squeezing all the shorts upwards. I'd even argue that ASDN could rally all the way to 350 nonstop. Any flag formation is going to be bought. This is just going to continue higher. ABNB, we argue that, of course, seeing retailers jump up so strong, a lot of thematics, masks off, vaccination, very well, all throughout America, China, the world. You know that the world is going to travel. Therefore, the primary beneficiary of all that pent-up demand is nonetheless Airbnb. You've got this bottoms here, a lot of accumulation, a strong breakout on big volume. Any decent chartist knows that is a buy. Even at the 145, that is a buy. Provided some people will be skeptical, they'd argue $170 is the first resistance. Guys, that's still an automatic 20% move, which you have to take advantage. Money is money. The risk is small. The reward is huge. When you've got an asymmetric risk-reward ratio, you want to buy. Nobody is stupid enough to sell Airbnb in a reopening rally. Chances are the people who got stuck here are either averaging down, buying more Airbnb, or you're going to wait to sell 170 to 180, meaning this is what you call a vacuum. Vacuum means absence of sellers. That's a bottom confirmation. Just in case you're here watching this free Friday class, go ahead and buy Airbnb. In fact, if you've been watching our global market updates, we've been admonishing a buy recommendation since 135. This is what we call an average up move, buying more shares because the market confirms that we are right. Aurora Cannabis, I've been also saying that weed stocks have been bottoming out, and you could see from 7 all the way to 9. Other people would argue, well, it's already been 2 weeks straight of straight up moves, correct? When you see 2 weeks of bullish engulfing, guys, we say that that is a bullish candle. A V-shaped recovery will only have a higher low at 8. Even if June goes down, you won't see Aurora Cannabis break that low of 7. Any drops to $8 is a great opportunity. However, if it doesn't drop, it could go all the way to 11. Why do you think it goes all the way to 11? Non-stop, no down. Because of high short interest, which pot stocks all have. Take a look at the short interest ratio. Aurora Cannabis is massively shorted, which is why this one went from 4 to 15 or 400% in less than a week. And it also happened here from about 8 to 19 in less than a few months. Could this be 7 all the way to 13 or 14 or 11? The answer, Awesome10X thinks, yes, it's actually a move as big as that, as big as that. This is not a feeble rally. This can go all the way to $11. Tilray, yup. This is a high short interest weed name. Take a look at that. From about $5 all the way to 64. Will the GME, AMC, short squeeze crowd you don't want to miss out on this. These are the kinds of asymmetric risk reward opportunities that you do not actually, you will regret not taking it. Actually, if you think about your framework, we always tell people to minimize the regret in your trading and investing. These, however, are called setups for trades. These are not necessarily buy and hold, but these trades are what you call high asymmetric risk reward ratios that it begs the question, why are you not in it when the favor is all upon your side? Alignment of all the stars. Perfect trades. Canopy growth down 60%. Weed names high short interest. Take a look. High volumes, capitulation, earnings. So 22, another 50% up, goes to 32. So you've got all the recipes, sector strength, low downside, high short ratio, high drop from the peak. Plus, the pot stocks as a sector are almost all retail crowd favorites, the same favorites of the GME meme stock crowd. Why am I saying this, guys? A trader spots all the best opportunities, not necessarily the highest rewards, but it's the highest risk reward ratio. You risk 5%, you make 50%. 1 is to 10. That's how a 10x member thinks. That's how Awesome10X thinks. These are perfect trades. Kronos Group, same thing. The difference is that there's no earnings, or rather the earnings was here and then it just moved nothing. Actually, you might be in for a surprise. The fact that Kronos hasn't moved yet from 7 to 780, it's just up 10%. It could actually be poised to go up more like a laggard catch-up play because CGC has risen, Tilray has risen, Kronos has barely risen. Sometimes when you see the sector strength, you can buy the laggard of the sector and still make money. There's a question, is it okay to buy Sundial too? The answer is yes. We argued that cannabis names have a high potential to go up. So we're not actually choosing, is it Kronos, is it Tilray, is it Aurora Cannabis, is it CGC, is it Sundial? You can basically buy all of it. A sector is moving up. Clever Leaves, also a weed play. Take note what happened. From 8 all the way to 11. Perhaps other people will take some profits. This one didn't even have some strong volume during earnings. But wow, after earnings, the market bought it up 40-50% higher. What does this tell you, guys? The earnings was the capitulation time for the weed names. Agrify earnings, also capitulation time, 7 to 11 or 2. Guys, I'm still here. I got disconnected. Let me share my screen again. Now, okay, let me show to you. So a lot of the crypto-related names got whacked, like whack-a-mole, 90% down from the peak. We argue that actually, because there is high short interest, no matter if it's 90% down, you could see that the bears are getting squeezed. Note what happened. From 80 cents, it's already 1.37, and 80% squeeze is 1.54. We actually argue that at that level of 90% down, it has nowhere to go but up. And you could see that volumes have also been rising. That said, what would happen to Humble? It will get sold at $1.50 and $2. Any dips will be bought, but 80 cents and $1 will be supported as a higher low. There's a question. Isn't it more dangerous to buy sundial, negative gross margin? Okay, the truth is we are only trading cannabis. We're not buying and holding cannabis names. Tilray, Aurora Cannabis, you can't even say that they have great numbers, but they will still be a short interest candidate. In the short term, I do think that the cannabis sector is not a long-term hold. Perhaps the best hold in the cannabis sector is Grow Generation. But if you want the squeeze happens on those types of names that I mentioned a while ago. So a squeeze play is not necessarily the fundamentally best company. Would you argue that GME and AMC are fundamentally the best company? The argument may be wrong, but it has the best price performance. Wait up. I need to go back to... So in terms of the best price performance, what I'm noticing here is that SOS was considered by people as a fraud. They were shorted 80% already down from its peak. What I'm showing here is not necessarily me buying, but showing you that the sentiment is turning. The bears are getting killed. Even in the fundamentally sound stocks that they've been shorting, they're also getting killed. Last night, SOS rallied 16% from $3 to $3.80. If you were buying during this accumulation of $3 and that volume, I think what happened here is the people who were trapped at 460 were selling, and they will continue to sell to 460. But I'm showing to you that the bears are getting hurt. So these 80%, 90% drops in the weed names, in the crypto names, are not necessarily all-time high moves, but you can trade them. It's a trade, nothing more. Now, if you have them, you should sell them on rallies of a 100% move. I'd argue that there will be people, let's say, let's talk about some weed names. Find the March peaks. This was the March peak of $11. I'd argue that Chronos cannot ever break that $11 of this March. So that March 15 area where we call people to nuke their positions, I do believe that that is going to be the peak of some of these weed names. Take a look at March peaks of CGC. It was about $35. That is your target. Take a look at Tilray. The March peak was $28. That's why it's just a 100% target. It's not $64. Aurora Cannabis, what's the March peak? $11. I do think that is the peak of Aurora Cannabis. Basically, for companies like these that fell 70-80%, the weed sector does not have a sustainability to go all-time highs because there's no earnings. As you just said, negative numbers, gross margin is bad. Why will it go all-time high? Weed will not go break the March highs. Crypto will not break the highs of March. At the very least, Humble Pay, I think, will not break $4. SOS will not break this $6-8. So there is a limit to where they can rally. Now, I also want you to take a look at the absence of sellers part. What's happening to Real Luck Group? 70%. Take a note in the companies that got bombed out, 70% down. It's possible that these lower lows have low momentum on the downside. And when you're trying to see a bottoming out pattern that you want to get at the lowest price, one of the ways that you can do it is to find companies that are just retesting, even if it's new lows. So example, this one for me, I'd argue that this 50 cents is already the low, 55 cents. If you want very low downside, you can actually buy this thin volume of Real Luck Group. Why do we like it? Because we believe that esports as a sector is going to go up. Meaning, if esports is going to go up, people will continue to bet on esports. And the answer to that betting company is Real Luck Group. Now, let's take a look at companies that got bombed out again. What happened to Yatsen Global? 66% down. This is a makeup brand in China. You're noticing the following. After earnings, so notice, guys, the magical criteria here is after earnings. I think what happened here is the people who wanted to buy Yatsen Global were just waiting for the numbers. When they confirmed that the numbers were good, great volume, they started buying it up. That's why 8 rallied to 11. I'd argue at 12, maybe 50% higher. Some of the people who bought at 8 would take profits. Nonetheless, I'd argue that that $8 is not going to get broken. When I say bullish, I'm arguing that the May 14 is the actual bottom, just like what happened in 2020, where March 19 or March 23, somewhere within that week was the actual bottom. Most of the stocks in the 2021 lows, in my view, happened May 12, May 14, May 13, May 11, some May 7. So, or some May 20. Definitely what you're looking at is whatever the lows of that stock for me, in my assumption, upon looking so many charts, that's the low. You won't get a new low if the worst of the worst are actually exhibiting higher lows. Even the most shorted names are exhibiting higher lows and getting squeezed in return. So that means full bullish on. Now, you saw companies like Jill going up. What can you say about Foot Locker? It's going up, all-time highs, good earnings, never faltered from March to May because of the reopening sector, with good numbers confirming the strength, it went all-time highs. This is the reason why I believe Airbnb, next 3 months, good numbers, go break $170. This is the reason why Disney, after good numbers in the next 3 months, reopening rally, all-time high moves, no resistances whatsoever. It's already happening for Foot Locker, already happening for Vista Outdoor. What's the common denominator of all these names? Reopening continues strong. The recovery is continuing strong, and the people who made a bet that the recovery is going faster than expected are being proven right. So it's just been going up, earnings were going up, apparel retail sales confirmed the strength, and therefore the people are really traveling, going outdoors. It means that your portfolio will go up all-time highs if your portfolio has some reopening themes. Abercrombie & Fitch, same thing. After good earnings, kaboom up. In the first place, take a note here. 2020, what do you call this pattern? This is the W bottom. The W, which is like a double bottom, a higher low. Now, after that bottom here, it just kept on rising. Take note that because the retail needed more time, some of the retail bottomed only around July, some even November. So, not all stocks actually bottomed during March. Some names actually traveled and consolidated for the last 6 months before they actually became a momentum move. Unlike this one, which actually went higher low. But notice, when it was going up, it was creeping up. So this is just a ladder on the movement upwards. Arya is not part of reopening, not part of any theme, so the answer is no. SPACs, not all SPACs can go up. SPACs are still winter. Not all SPACs. ArcelorMittal, steel, mining company, yes, going up. We argued actually in November, there was the Biden infrastructure bill. And so far, the continuation of the signing is continuing the strength of all these steel plays. So all the infrastructure has been beneficial. These momentum are just getting stronger and stronger. Any dips of ArcelorMittal is just continuing to be a higher low and a higher low. In fact, March to May, similar thing happened. No drops, just higher movements. That means that when the growth stocks left the scene, all those growth stock money went into the likes of metal and mining, particularly steel companies such as ArcelorMittal. So steel companies, mining companies, reopening names are in the all-time high zone play. United States Steel, the same thing. March, April, May, higher lows. What do you expect for June? Also going to be higher lows. You'll expect in the next 6 months, United States Steel is going to go 30, not 20. If this went to $20, there will be a lot of buyers on steel names like these. People who are under position on steel will actually take an opportunity to buy on any dips. That's why it never will go down. It will just stay 24, oops, going up. Uptrend channel is what you call this on a technical pattern. Now, I would argue the following. I said SPACs, not all are going down, not all are going up. Let me argue that the LiDAR companies like Ouster, Innovis, IVA, Velodyne LiDAR looks to be bottoming out within the 8 to 11 zone. The LiDAR companies as a sector might be in a trading range. So no earnings yet. I mean, the earnings are good, but people are not necessarily liking it because they would argue that the SPACs are highly expensive. But I'd argue that for this one, LiDAR, this could be a range. I'd be surprised if $11 went to 15. That would be a good surprise for me. But you'll see that Ouster, in my view, is a buy and average all the way for the next 6 months. My estimate for SPACs in terms of charts, they'll be rallying around late quarter of the year, like maybe September, October. So this is why I made my chart until August. I think that Ouster might range within the next 3 months. This might not be an all-time high play. So the people who got in at 9 might sell at 11.50. They might actually repeat this arrow range trade for Ouster. Now, because 3D systems was going up, I argue that all these additive manufacturing could actually be going up. But my particular resistance is actually around March. So the March of resistance of Nano Dimension is 12. I'd argue that at 6, this was bottoming out. 5 to 6 Nano Dimension. The 70% drop from the peak was already the bottom. In any month, June, July, I don't think you will break this bottom of May. After those earnings were results, they all went up. I think that it couldn't be any worse, and so these names will just go up to 9 and 11. So other people would sell 9 and 11, but at 738, it's still a buy. So you're seeing 20% recovery rates. So these stocks may not go all-time highs, meaning I don't see 7 going 17, at least in the short term. But I do think that it goes 9 and 11. So just pay attention that March is your first resistance. And if you're more bearish, then this will be your resistance around the month of April peaks. That would be your resistance. So this is what I want you to do with additive manufacturing. After 70, 80, 60% drop, first take a look at what the peak was during March. Whatever the peak during March was, there will be a resistance there. Because the people who bought here would still sell at $40 or $44, no? So these would be your resistances. X1 would have resistance at 40 or even 32. But chances are, because those resistances are very high from current level of 22, the risk is small, the reward is big, the asymmetric ratios favor the bulls. As long as you're buying 22 to 20, or if you have a high cost, I'd assume that everyone who has a high cost will actually average down. Those people who bought in March and April here about 28 to 32 would buy more here at 22, and then they'll sell at 28 to 32, which means that additive manufacturing as a sector is a buy and trade type of stock. But you have a sizable rally on these types of names. X1, Nano Dimension, Stratasys, you have some leeway for that trading range action. The first criteria that you only have to ask yourself, should I trade the range or should I just hold on to it? Ask yourself if the March peaks are still significantly above. If it drops so much and in the March peak is already 100% rally, the chances for it to go all-time highs is very mute. Meaning in the next 6 months, I don't think that you'll make more than 100% on them. Maximum from the lows, sample, if you bought this at 15 or 16 or 20, if you make a 100% move at 40, you better get out and run. I don't think you'll go 60 or something. I took a look at companies that have been defying gravity Take note what happened with Green Plains. This is a biomass. This is part of the renewable energy. Green Plains actually successfully is trekking near the all-time highs. When it's trekking near the all-time highs after earnings, it tells me something. This is similar to Roblox. It's not as if like the all gaming companies are actually at all-time highs. In fact, Unity is still below 40-50% from its peak. So when you're seeing strength by the company, not necessarily by the sector, it is actually a more powerful company. Solars and e-commerce, I don't have the charts for them today, but e-commerce have been very strong. Not necessarily all e-commerce stocks. Shopify, very strong, gonna go all-time highs. I think C Limited is gonna keep on continuing going all-time high. So any drops next month is just gonna be a higher low. If you're talking about Alibaba, JD, and Pintuatua, they're down 50%. We like them. We like their earnings, but so far I bought them for the value. The charts don't show a clear bottoming out yet. I haven't seen a strong reason to add more, but I do have Alibaba, JD, Pintuatua in the e-commerce sector. Solars I've kept, but I don't see a bullishness yet to inspire a resurgence on the solar names. So, of course, I'm trying to answer you based on what the charts are saying. But am I bullish on solar and e-commerce? The answer is yes. So if you have solar and e-commerce, you might as well keep it. Or if you want to cost average it, the answer could be yes, because I don't see any reason for them to continue falling down. Now, wearable sector as a group, I've already been seeing strong rallies. So that means that if your money is tight, you don't necessarily have to buy everything. Example, you've got solars, you've got wearables. What do you prioritize? You prioritize where the momentum action is coming into, and it's actually coming into the wearables. So wearables have been rallying. This is 10 to 12. I'd argue that by June, any drops at 11 is going to be bought, and this could just continue all the way to 14, 15. The nice thing about HiMax is that it barely actually fell. Even if 18 fell to 10, you're seeing higher lows. And actually, the people who got in 2020 are all positively up. Meaning the people who bought at 6 are all positive. That means they are not in a hurry to sell, especially the people who bought at 4. So the only ones who got trapped are only the ones who bought in 2021. Everyone who bought all the wearables since last year, when they look at their portfolios, they're not in a hurry to sell. Why am I saying that? The fact that wearables are all up massively since 2020 tells you that there are no real resistances here. Not much resistance. High. What am I saying? Look at this. Copen, only in 2021, if you've been buying above $4, actually you're still up at $7. What do I mean with this 50% drop? This is what you call shaking out the latecomers. The only ones losing in Copen are the ones who are latecomers. But the entire trend is very bullish. Take note, the people who all bought in year 20, I'm sorry, I got disconnected. Yeah, so I need to define sectors that are gonna go up as a trend. Let me define the sectors that are gonna go up as a trend, meaning you have no problems. You're gonna see them hit all-time highs. Wearables, in my view, are gonna trend up. Trend up meaning higher lows, higher highs, all-time highs galore. Crypto related names is just gonna be trade. They will be shorted. If you have a crypto miner like or any crypto related stock, Humble Pay would get sold on rallies. 3D printing names are, in my view, gonna get sold on rallies. Additive manufacturing is not gonna be an all-time high play. It's gonna be sold. Um, all the crypto stocks will be sold. VIH, Coinbase, Humble Pay, all the fintech that is related to crypto, Riot, Mara, it's not sustainable. Rallies would be sold on peaks. 3D printing, no matter how strong, I think that there is really a resistance. And so be careful on the March and April resistances. I'm actually gonna side with the bears on that side. Crypto is a trade, 3D is a trade. The weed names are a trade, but now, if you're talking about current levels, 3D printing and weed are gonna go up first before they go down. So because they're all oversold, 3D printing names are gonna go up first, weed names are gonna go up. If you have 3D printing and weed names, I would advise you to buy more while they're low and then sell it when they go up. So it's a buy low, sell high name. However, with wearables, as you can clearly see here, Nanox is more of a trade. All of the bombed out healthcare plays are likely a trade, not a buy and hold move. Microvision, Copin, retail, steel, these are what I'd say trending up. So it's very easy, guys, to see if it's going to be a buy and hold for you. Let's say you've got Microvision. You can actually sell it here at $22, right? But the beautiful thing here is that, do you have to sell all of the shares? Perhaps not, because it's trending up. You can't just trim 22. If it drops at 15 next month, then you just buy again. You can trade it and you can hold it. That's the beautiful thing about the wearable stocks. Same thing with Eman. I'd argue that this one goes to about $3, $3.50. With the entire sector actually going up, chances are this will actually have a leeway to even go $4.50. So if you are a person who wants trading that's trending, that had a pullback, I think wearables is something that will fit you. Now this one, what am I going to talk about biodegradable plastics? I think that this one is simply a trade. All the short squeeze related names are, in my view, a trade. GME AMC is a trade. BBBY is a trade. Danimer Scientific is a trade. I do think that there's a real resistance here at $30. You might never see this hit at $40 or $50, but if it did, then that's great. But at 23, I think the risk is still on the upside. The risk is it goes up to $30 and everyone who's caught short on Danimer Scientific is gonna cover. So these are not highly ideal setups because 23 is 20. I'd prefer other setups. But if you're gonna ask me what's gonna happen with Danimer Scientific, I think that the answer is upside. It's gonna go up. The 12% rally last night is probably gonna take profit for some, but they will actually wait. Some of them will actually wait 28 before they'll take profit. I'm also taking a look at all the casinos. Take note, some casinos, whether it be DraftKings and Penn, Boyd, Wynn, MGM, Caesars, and even the games, the software names that are helping the casinos, all-time highs. So that means casinos as a sector is an all-time high sector, guys. So amongst the EVs, you have to understand that some EVs are in a turnaround play. So Ford has targeted a 40% increase in electric car sales by 2030 under their latest turnaround plan. GEL actually went 12x, not necessarily having great numbers, but just a turnaround plan. So what it means is that whether Ford actually executes this initiative is not going to be material in the short term. The short-term move is that the market is already agreeing that it is a positive thing, that they will succeed in their goal. In their plan to increase investments in EVs to $30 billion through 2025, take note that we've been discussing that Ford and GM are not necessarily dinosaurs. We've been saying they're actually hybrids. They're a half Flintstone and they're a half Jetsons. Why are they a Flintstone? Because people assume that they are just value. They were buying Ford and GM because it was cheaper rather than simply buying a growth stock like a Tesla. But the reality is Ford and GM have so much initiatives in the electric vehicles. Ford has so much battery suppliers, charging stations. GM also has been helping a lot of Chinese electric startups and have been doing very well with their Wuling Motors initiative. So that means that when you have such maximum pessimism, you have more leeway to surprise on the upside. And that's the reason why Ford and GM are actually very strong. And you want to actually take a look because these are turnaround memes. From $18 all the way to $4, will Ford go to $40? Our argument is that these are also 10x memes. In fact, if you are not of the belief that it goes if you are not of the belief that it goes $40 to $30, at the very least, believe the charts and those volumes are real. The charts here, $11, $12, continuing up to about $15. Any dips here were consolidation and breakouts to the upside. When a market is consolidating, it doesn't know the direction. The earnings call and the investor day of Ford Motor solidified the bulls that they were right. Therefore, the bulls have control of this game. This is on the way up, and the bears cannot do anything about it. General Motors, the bulls have the leeway to answer this on the upside. We said that the all-time high was $47. We actually said before at $25 that it was going to go up. In comparison, people are comparing what the valuations of General Motors are versus Tesla. You can argue that it's never going to be compared. It shouldn't be compared. But of course, if you just compare electric vehicles, if these are successful, even in their Chinese motors, they've got the Wuling motors selling very well, it can actually go up. So the leeway is actually on the upside. The path is on the upside, which means that there is no single car that's going to win. A lot of cars are winning, and that's how the market is betting. Now let's take a look at metals. With so many cars all winning, whether it be a Ford, a GM, does it mean that metals are going to be in tight supply? The answer in my view is yes. That's why American Battery Metal did well, recycling, actually up 140% from its 2-month low. It's going to happen in my view with Aqua Metals. Very strong volume right last night. And I think this one, break of $2.50, $3, this can continue all the way to $4. So why am I saying that can even go to $5? If I'm right that this goes up, $2.50 to $5 is 100% up. If you don't want to waste your time, you actually need to recycle metals. And Aqua Metals is doing that, recycling. So I like the SPACs actually that in the recycling mode. Some people are asking me, if you like ABML, if you like Aqua Metals, does that mean that you also like Lifecycle, which is PDAC, that's Perido acquisition? To be honest, I do like a lot of SPACs fundamentally. But the problem is when I take a look at the sector, I haven't seen money flow in. That said, are the SPACs so cheap? Yes, $10, no downside, $9 sometimes for SPACs. Okay, these are the news that you're seeing. Swimsuits, luggage, hot items, US shoppers preparing for summer events, relaxed COVID restrictions. This is an impetus for continuation of the momentum for retail. And with retail, I've been thinking, well, there is a company called Poshmark. It's a social marketplace for new and secondhand style for women, men, kids, pets, home, and more. Combining the human connection of physical shopping with ease, selection, and the benefits of e-commerce, Poshmark makes buying and selling simple, social, and sustainable. It's a community of more than 80 million users across US, Canada, Australia, and is driving the future of e-commerce, promoting more sustainable consumption. Also, they partnered with Snapchat, Facebook, Instagram, Twitter, TikTok, Pinterest, YouTube. They actually just recently said they have a partnership with Snapchat. So I'm saying that millennials might actually buy a lot of Poshmark. Oh, wait, I haven't shown you the chart. All the Facebooks are actually hitting all-time highs. So all the social media are going all-time highs. It tells me that with this resumption of revenge travel, a lot of people are still, a lot of the retail demand are gonna heavily spend on digital advertising, whether they will remind you on your Facebook news feed that you should buy your swimsuit already and so forth. So Poshmark, I'm saying that this one after earnings dropped, right? But take note, the fact that after this gap down, that it covered all the gap down tells me that the market is more bullish rather than any earnings call. So I'm already seeing capitulation in Poshmark. That's why I'm sharing this to you. Looks like this e-commerce retailer can be similar to what I saw last year with Farfetch. I've been saying that Farfetch actually was a play here, a buy call here at about $7 and $8. Take note here as well, with retail in demand, these drops are actually buying entries, guys. Farfetch, for those who aren't aware, is a luxury retail play where you can buy off-white, you can buy sneakers, some bags. So if you believe that these girls and these guys are gonna shop with the consumption retail spend happening in the next coming months, you might actually want to buy some of these. Farfetch and Posh. What I'm saying here is that people assume that retail spending is all gonna be only in the stores, but actually retail spending is gonna happen online and offline. Whether Amazon or a luxury retailer straight in Farfetch or straight in Poshmark. So you want to actually buy those names. In my view, they would probably be, I'm not sure about resistance because these are fresh charts. Usually, you can argue these can just go higher lows. So I'd argue no resistances for them. Just let them go up, higher low, trail, higher low. As long as it never breaks those main lows, I think that is already the bottom. So I don't see any resistances. Arguments of resistance could be 50% higher, 100% higher. But take it one step at a time, you'll make money. Usually for winners, I don't really sell. I'll just hold. So now let me show to you what I've been seeing in the FAMGAS. Most of your FAMGAS, Facebooks, are making money on digital ad revenues. And digital advertising happens in every reopening. Why do you think that I stopped spending on advertising? Anyway, nobody's buying, so why will I spend? So right now, I do think that this one is going all-time highs because of the resumption in travel, resumption in spending. People are spending, therefore, even the companies are spending in digital dollars. So Facebook hitting all-time highs. Amazon actually just neutral, perhaps because it's, I don't know why, but it's just neutral. Microsoft going up. Cloud computing, this has nothing to do with reopening, but just tells you the strength. Therefore, your big tech names are still continuing higher. Apple just the same as Amazon, just sleeping. Alphabet, similar to Facebook, going all-time highs. Digital advertising, everyone spending on YouTube. Nvidia, my argument is this one goes all-time highs. Earnings was great, and any drops to about 585 will be bought, and that will go all-time highs to about 650, 700. You see big tech going up, which means that I do think that the NASDAQ will eventually break 14,000. We're going to break NASDAQ all-time highs galore. ARK-ETF is weak because they chose a lot of growth names. Nonetheless, I do think that this May low of ARK-ETF at $100 is the low. 100 with 112, there could be resistances in the March highs, no? There will be some selling off here at $130. So ARK-ETF, why is it weak? Because ARK-ETF owns 3D printing names. So if ARK-ETF's 3D printing names like X1, Nano Dimension, Stratasys, if it's not gonna break above those March highs, ARK-ETF is not gonna break all-time highs. Also, it means that ARK-ETF's March highs of about $750 for Tesla is not gonna happen anytime soon. Perhaps in the next 6 months, Tesla will just consolidate. They will be a range trade. So ARK-ETF will just be in a range trade, $100 to $130 or 30% average move in the high growth names. Some growth names can actually go 50%, which means $550 to $750, $200, that's about 40% if you make a buy at the low and sell at the peak. I don't think that 650 is the high of Tesla. I'd argue that this is all the way 40% higher to $750. Square is also gonna be stronger, but actually just perhaps a trading range. So 30% from about 200 to 260 or 280, you still have resistances at 260 and 280. Roku also gonna have resistances in March here about 400, but that is still a 30 to 40% range nonetheless. So Cathy Wood stocks are mostly just a range trade. Affirm is a fintech play, very low. There will be resistance at $65 and $70 in the short term. Teladoc Health, expect a resistance here at about 160 to 200. Most Cathy Wood stocks are a range trade name. ARC-related names might not go all-time highs. If you're expecting Teladoc 150 goes 300, perhaps not, but it will go to 160 to 200, still gonna make money nonetheless. I do think this main low is the low. You won't see it go break 120, what's this, 127 or something. It will not break that low next June or July or August, September, October. I don't think so. Zoom Video, the lows was about 275. I think that was the low. So it might not go up, but this one at about March areas of about 350, I need to see the numbers for it to break. But we're seeing just consolidation in Cathy Wood stocks. This means that in the next 3 to 6 months, don't expect outperformance from Cathy Wood. Spotify, no expectations. I think it's just going to be range bound from 200 to 300. Nonetheless, at 240, at 300, do you want to make money? Yes, it's still what? 20% higher. CRISPR, also the same range trade. See a resistance here at 150. CrowdStrike is actually stronger. So this is actually moving higher, but I don't think it's going to break all-time highs. $240 will still be a resistance, but 180 is a support. CrowdStrike, similar chart pattern with C Limited. Forces that move stocks, fundamental factors, technical factors, news, market sentiment, the bottom line. My opinion can change if a fundamental factor changes. Let's say suddenly Teladoc or Tesla actually announce something great. My range trade assumption could be wrong. But the technicals are gonna tell you that it's a range. Market sentiment favors that it goes up first, then go down. So and of course take a look at news whenever we'll of course tell you if news changed. But news is showing to me that Cathy Wood stocks is a range. Reopening names are all-time highs. Therefore, the more casinos you have, the more stock prices in that sector, you will make some money. Sports-related names, we talked about SCR and Geni, GENI. That's really where the market is gonna go. Let me give you some charts that are looking at very, very good moves. Geni is Genius Sports. Take a look at this, going all-time highs. So I would prefer you guys, if you're gonna ask me, where's the preference for the money flow? The money flow will prefer all these all-time high moves. Go for Geni, go for lithium, LTHM. That means there is a short squeeze happening in metals. Lithium is gonna do well. Airlines like Azul is gonna do well. SCR, Score Media is gonna do well. So that said, I'm not bearish on healthcare. I think is just a trade. So ARC Genomics is gonna be a trade. Any genomic play is a trade. CRISPR, Editas, Nitelia, PacB, Bingo, most likely genomics are just a trade. You're gonna see this March area still a resistance, 27 to 36. 36 people will exit PacBio. Age is gonna be just a play on a resistance as well. Whatever the March highs was, that's a resistance. So it's just oversold right now, but I don't think the market is gonna buy these stocks. So they will continually not get bought. The buyers are heavily in the weed sector. If you want to play the weed names, so go for those. I'm seeing already volumes pick up on the weed names. Okay, so to recap, let me just type it all here. Memories of FOMO and regrets, thought gas. I'd say this one. Okay, why am I talking about these types of charts? Okay, there are leeways for stocks to go up. The stocks will go up fundamentally. So example, if the stock is really looking so bad, a bombed out name like Nano Dimension, it will go up because sentiment is already bearish. And if their earnings are gonna grow, then the P multiple can expand. Is the growth real so far? I'm seeing large across the, it's not across the board, but most of the names I'm looking are actually already seeing pathways of recovery. So I want to show you something like this. I've read this in a psychology journal. People are actually moved by regret. They are regretting the fact that they missed the 2020 rally. And initially, the actions will cause them painful feelings in the short run. And long term, their inactions will be regretted more. Meaning, if they work on their action, let's say they buy and they're wrong, let's say June it falls, they just feel a pain in the short run. But in the long run, if that was a right move, they'll actually feel so much pain regretting not taking action. I'm seeing that during May, a lot of people failed to take action. We already said May is a Christmas shopping list you want to buy. Around June, people will minimize their regret by actually acting upon it. That's why you'll see on June and July, it's going to be more aggressive buyers. You'll see the people who missed out on a massive rally during during May, will actually add more money in their accounts, especially as crypto has been falling down. I think that money is going to buy stocks like weed names, stocks like lithium, airlines, reopening theme like Airbnb. I think that everyone who has failed to buy my warning to buy the Christmas shopping list in May, despite the fact that let's say you bought in March or April, especially in May, if you didn't buy May, with June stocks still significantly lower, I'd say that people will minimize their regret by buying. So there is no perfect way to eliminate the fear of missing out, but there's something that I have to share to you. Decisions often imply trade-offs, forcing people to accept missing an opportunity in the past or in the future. However, it is not fully clear whether a past miss or a future miss elicits more regret. Some people miss the fact that they didn't invest 2020. Some people regret that they didn't buy again in 2021. So all that negativity is going to be accumulated over time. All of their regret, their denials of the present, unease, anxiety, tension, stress, worry, all the forms of fear are caused by too much future and not enough presence. They're not acting today. Guilt, regret, resentment, grievances, sadness, bitterness, and all forms of non-forgiveness are caused by too much past and not enough presence. What you are seeing here today, and what I said last week, I've already said the growth stocks bottomed out. 2 weeks ago, I already said the markets have bottomed out. And today, I just reiterate saying that yes, this market rally is sustainable and you have to buy. Regret is defined as an emotion when a person is thinking about just making the most of the current situation. This negative emotion emerges from an undesirable evaluation process of a certain decision. Let's say you bought high in January or February. You will regret this more if you don't buy lows of May and June. I'm telling you this already. Making the wrong decision of avoiding buying the market at its lows is your worst decision. It is emphasized that the complex pattern triggered by negative events. You know the worst decision? Let's say you buy January, February, and sell it June or May. That's going to be the worst decision. In the individual decision making is because basta think about regret. Even Jeff Bezos talked about regret. One of his best ideas was have a minimization of regret framework. So if you really like the company, now at cheaper levels, wearables, let's say you believe in wearables, we're telling you buy, and you don't buy, you're gonna regret it anyway. You'll have the memories of fear of missing out and regrets on the ones that got away 6 months from now when they get away. Actually, in just 2 weeks, a lot of stocks already got away from you if you didn't buy May 14. So today's class is just to reiterate that point. Keep on buying. Review this class. Review the class. Have high growth stocks bottom. May 21 last week, and then May 14 we kept on talking about May 17 Christmas came early in May 14 we also gave you strategies. Don't forget that most of our calls are correct, especially long term. Short term are also correct, so use this very short term opportunity to buy stocks. SCR, buy it. Snowflake, I haven't read the earnings report, but useful to actually check if the earnings were great. Actually already go up Earnings already went up siguro, and then capitulation, so bullish candle. That was the low of 180. This one will just continue going higher. So a lot of software names can continue going higher already. It looks like, guys, the only thing that you have to do, forget your fear, because if you forget, because you will regret it. You might see yourself getting FOMO'd at the peak when you shouldn't. This is the time to keep on buying. Take a look. There's so many capitulation bottoms. Agora, bang, capitulation bottom. High volume at the bottom equals what? Buy. It's a buying zone, guys. That's all I can say. I have to be 100% long. In fact, 200% long is fine. 500% long is fine. I don't care how long you want to be, but you cannot be bearish at bottoms like these, or you will regret it. Let the bears get killed because they deserve to lose money. You don't become bearish on charts like that. Those are all bullish. Thank you. Bye-bye.
Recording.